Hello and welcome to the December 11th, 2009 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, today we are featuring Harris Corporation, ticker symbol HRS. This is a $6 billion technology company. They operate as a communications and information technology company serving both government and commercial markets worldwide. If you take a look at Harris, off of this early July low, you can see this bullish engulfing candle actually began the uptrend for Harris. Notice we bounced toward the end of July, got up close to $32, testing the reaction high in early June, and after one more pullback near the 50-day moving average, we then had a major gap up on very, very heavy volume. And again, after a quick pullback, the uptrend continued higher and has remained in play really over the past 5 or 6 months. Now, couple things that are interesting here on Harris. Number one, each time it's been pulling back to its 20-day EMA, which is this green line, you can see that it's been finding support. Traders have been supporting the stock, buying it on each dip to the 20-day, and you can see even as recently as the last couple of weeks, we've seen that pattern continue. Now, part of the problem now is we have on the most recent high, Thursday's close, which was a 52-week high close, we actually have been printing a negative divergence. So as prices are moving higher, we are seeing the MACD not follow suit, and in fact the MACD is pointing lower at this point, even though we're breaking out and closing at a new 52-week high. The other thing that I think is very important here is that high that we set on Thursday came on just 562,000 shares. Harris normally trades over 1 million shares. That's just normal, average daily volume. So we're seeing this breakout with negative divergences, light volume, and what this suggests to us is that Harris might be just a little bit overdone here in the near term to the upside, and it could use a pullback to kind of reset the MACD, maybe back down close to the center line, and perhaps get a 50-day test in the process. So that's what we're looking for in the near term. We like this as a potential short trade, because if it goes much further against us to the upside and the volume were to pick up, then we can simply move back to the sidelines, cover a short position with very little damage. However, if we're correct about this momentum slowing and we do see a reversal on the chart, we do believe that we could see as much as $4 to the downside, which would be almost a 10% gain on Harris. So we like the risk reward of a short position here, but again, as with all positions, trading positions, especially in this whipsaw market that we've been in, keep your stops in place and keep them fairly tight. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter, and we'll be happy to send the chart of the day directly to you via email. Happy trading.